Okay, recording this video on Saturday, the 24th of August 2024, just gone 10:13 a.m. Chicago time. Do hope you are doing well. So it's the weekend, time for another weekend futures market recap. I'll go through 15 of the largest futures markets and I'll show you what I'm seeing on my charts. Do hope your trading went well this week. It was an important week. We just grinded up and up and up, and I think it puts us in a really interesting position for breakouts over the next 2 or 3 months. So that's what we're going to talk about in this video, and mostly longer time frame charts. Going to talk about obviously equities and bonds, gold and Bitcoin. We're going to talk about crude, super important, all the Forex charts. So not all 15 markets, but we'll go through the majors and I'll show you what the higher time frame charts are looking like at the moment. But before getting onto charts, just to say finally, yep, we're settled in our apartment here in Provence, in Avignon. A beautiful part of the world. We were here last year for a month. This year we're here for 3 weeks, which doesn't seem enough to me. There's so much to see and do here. We just had one of those classic French weekend lunches. Beautiful restaurant, actually in a converted railway station, and you sat under the trees. Beautiful food, French families sitting around having conversations. No kids on devices, no iPhones, no iPads, nothing like that. Everybody's just having a nice time. And it's just classic memory to have. So a beautiful place. If you decide to come to Provence, I like the northern end of Provence, which is closer to Avignon rather than Aix and Marseille on the southern end. But plenty to see and do here. Anyway, let us get on to the Emini charts. We'll do the daily all the way down to the 15 and then the 13,500 tip bar chart, and then we'll go on to the higher time frame charts for the futures markets. And here we go. It was up and away on the Emini daily chart here. We finally put in a little pullback to end of trend. So there's some interesting patterns happening here on a better sine wave here on the daily chart. So we sold off. We overshot support on the lowest time frame, and we've been caught by support in the highest time frame, because there we go. Underneath here you can see pullback support come in there over this week's activity. I thought it would come in last week. That's why I was saying we were going to overshoot and be caught by support in the highest time frame, and usually that would print down here at the lows to catch that bounce point. But no, the market is so strong, it's pushed away from that quickly, and the timing of that cyclical support coming in has happened over the last 3 or 4 days. So we got that support in there, although we've got resistance on the end of trend here. Does that resistance on the end of trend mean much at this point? Possibly. We could just settle in for 3 or 4 days, something like that. I don't think it's a point where we're taking profits, because we don't have blue professional up bars. We don't have exhaustion buy patterns in terms of volume. What we've got is we've got some amateur bars at these highs. Wednesday, Thursday, Friday was better, but amateur bars at those highs, and we settled off there. It's a good read on better momentum, 4.4 million down here, but it's not an exhaustion pattern, it's not a flush pattern or anything like that. So background's in red, that means we're in an uptrend in terms of price and volume. And so what are we now? I think we're 56 points away from the all-time high back here. So super important. There's going to be fireworks, and it's only 50 points away. So I think we're going to have a run for that at some point this week, break through this resistance, break into another move into an uptrend. The next area where I think we'll have some more trouble is when we get the intermediate time frames crossing here. So we got the support come in here. We've got to break through this, overshoot on the upside again, and then have resistance come in on the intermediate time frame when these cross up at plus 100. But anyway, a strong week, uptrend on the higher time frame chart, no blue professional bars, and that's what we're looking for to take profits on this move. Finally, to have blue professional up bars. The down bars here is, yep, selling it down at this point, but buying up when it got down to 5200, 5150. 135-minute chart. There we go. We've got that little resistance here. It's on the intermediate time frame. Pullback to end of trend. Come in here. We got a bearish divergence pattern happening on better momentum, but that's based off the exhaustion pattern here, which was getting the move going. So it wasn't like a topping out pattern where we had exhaustion buy at the highs, bearish divergence comes in, we weaken from there, and we sell off. This is bearish divergence based on the exhaustion pattern getting this move going. So I'm not too worried about that. No blue professional bars, some amateur bars here at these highs, but the background's in red, so we're in a confirmed uptrend, and we've got sign of strength gone off, I think, on that last bar there on the 135-minute chart. So that's a good thing. And again, we're just so close to the all-time highs. We've got to go run some stops, go cause trouble out of those all-time highs. 45-minute chart, background's in red, full uptrend. Rambo patterns here, yep, we weakened from there, but we never broke the lows of this Emini bar sequence here. Bang, bang, bang. Those lows are important break points. We got a little bit close, I suppose, but we continue to break higher. No blue professional up bars, so the trailing stop on Better Prime, again, miles away down here. We've got to go see those at the highs. Cyclically, yes, we got pullback to end of trend. It's big things happen at triples. Potential area of resistance there, with all three time frames coming together for the first time on this move up, but no weakness, no white bars to show we're in a downtrend, no support's been broken or anything like that, no exhaustion patterns, no blue professional bars. So again, it's like there's no reason to say we're going to stop here. I think we're going to push through. Big things happen at triples, potentially breaking into a trending move on the 45-minute chart. 15-minute chart, here we go. So the last 2 weeks we didn't see any blue professional bars. We had some amateur bars here, amateur bars at the beginning of the week, but we settled in a little bit. Again, the low of that sequence never got broken. We've got some blue professional bars come in with the jiggery pokery with, was it Jackson Hole this week, but you know, the last exhaustion patterns we had were exhaustion sell and bullish divergence come in here. We bounced from there, so we've not seen exhaustion buy on the upside. Yep, we've got a little bit of trouble here with pullback to end of trend on the 15-minute chart, but all we'll do is maybe sink back down, find support at some point here on the highest time frame and bounce from there. So we're close to a trailing stop there, but I don't think that signals that we're going to break into a downtrend yet on the 15-minute chart. And the 13,500 tip bar chart, so the last time we see big pro bars, end of last week, we've broken up some blue professional bars at the end of the week. Yeah, we're putting in pullback to end of trend on this time frame. So when that goes in, then let's wait and see what happens there. We could have a little bit of weakness from there, because that's on this time frame a little bit of topping out. Exhaustion buy, bearish divergence flush. We've also about to put in pullback to end of trend on the highest time frame here at some point, probably above where we are at the moment. Then we'll trail the stop up at that point, and then a break of that could be interesting, because then we've got all three things coming together. We've got our momentum patterns signaling that we're going to roll. We've got blue professional bars at the highs signaling that they're taking profits, and cyclically we've run out of steam on this trending move. But this is a lower time frame chart. I'm not saying that that's just a temporary move. That will be a short-term move. It's not relevant in terms of the higher time frames. It'll just show a little bit of weakness that we'll have, which will be another launch pad point for the daily chart to take off to the upside. So I don't know when we're going to get that, middle of the week maybe, play that thing out. This week, what was I playing? I was playing bonds at the beginning of the week, so I'll just show you quickly that on the tip bar chart here, most important tip bar chart, beginning and the ends of the week marked by the solid vertical yellow lines. Last week we had a setup in bonds, we had sign of strength here, we tested into the lows and we took off to the upside, so as long bonds. At this point here we had big pro bars coming in here at these lows, and then they started to take profits as we moved into this move, and when we got a break below that last blue professional bar, the trending move fell apart at this point here. But I was out of my long bonds position at that point, and I was moving into long British pound. British pound was relentless this week. It was unbelievable. You can see the trailing stop here. The background's in red, has been for 2 weeks pretty much. I mean, we had a little bit of weakness here. 2 weeks of background in red uptrend in British pound, and big pro bars here all the way. This, yeah, possibly some profit taking at that point, but we didn't have exhaustion buy and bearish divergence. It was all on the downside. We could see exhaustion sell patterns happening here, so plenty of opportunities to get into this long trade on these little dips. That's a little dip here, blue professional bars on the dip, bullish divergence, bounce off there, and so on. So it was a couple of good opportunities to trade a British pound long this week. All of the Forex contracts were strong this week. British pound seemed to me to be the strongest of the lot, so that's why I was jumping onto that rather than the euro or the Aussie. So, having talked about a couple of the tip bar charts, let us talk about the higher time frame charts. We're going to do the crude market first, because super important bar happened on Friday here. Big pro bar, background's in blue, bar is blue. That means the average trade size is super high, and this is the daily chart of crude. So, crude, we've been fussing around here at $60. Blue professional bars, all these exhaustion sell, bullish divergence, flush patterns, then we come back again, exhaustion sell, bullish divergence. Blue professional bars come in here, we test, we got more flush patterns at the low. We've been in this congestion area for a year and a half, and over the last couple of weeks we have had exhaustion sell, blue professional down bars, we race away. The professionals are active at this point, and then we come back to test into those lows, And what they do on Friday, they buy it up 74, 74.83, bang, super high average trade size here. That is important. And timing wise, cyclically, I think we're going to come into a big things happen at triple at the moment. So this is daily chart, and we've got support on the highest time frame come in here. We've got support on the lowest time frame here, and at the moment we've got resistance on the intermediate time frame. Let me just turn on that sine wave. Bang, bang. There we go. You can see on the intermediate time frames here, the slightly thicker lines here, they've crossed at the bottom here. So we're just looking for a little bit of strength, and we'll get a cyclical cross on the intermediate time frame. So that'll mean we've got all three time frames. We've got a big things happen at triples, supports on all three time frames come in there, and that'll give us one of these red lines here, and we'll get a signal at some point when we get strength above there. So on the daily time frame on crude, we've got super high average trade size come in here on the bounce here at 70. We've got cyclical support coming in, super important. On the 460-minute charts, there's three of those bars in a day session. You can see at these lows, super high average trade size, blue professional bars coming at the lows. We're kicking off there, bouncing out of that pattern at 70.50. So crude could be really interesting for the next couple of months. We could finally break ourselves out of this ranging pattern that we've been in for a while. Just bring up the weekly chart here. This was the exhaustion sell a couple of years ago that we had down to, it's not strictly speaking, it wasn't negative prices on crude, it's just a back adjusted crude chart will give you negative prices down here, but they sold off super hard, and that's when we had exhaustion sell, bullish divergence comes in here, and that's been the marker for this up. We've been in this range, and we could be breaking out of here to an important move in crude. So getting out of 74, 75 above 80s, and then maybe looking again at above 100. Crude, it's priced in US dollars. We've got the US dollar weakening, and so there's a technical move there because the US dollar is going down. Therefore, the price of crude is going to strengthen naturally just because of that. But there could be other things in the offing in terms of the reason why crude is going to increase in price. Bonds rallied this week pretty hard. Actually, on the higher time frame charts, the 30-year bond is a more interesting chart to look at. So here we go. Here's an exhaustion sell, blue professional bars, big pro bars, the background's in blue as well, super high average trade size coming in here October, November last year. So that was really important as a low point, similar to this low point that we had down here. We've rallied from there, tested into the lows, broke out at this point, tested into the lows of those blue professional bars with buying that breakout there, and we've rallied from there. And so bonds on the higher time frame chart is showing strength at the moment. We've got cyclical support in the highest time frame here. On the lower time frame chart here, yep, it looks like a bit of a blow-off move with professionals taking profits. Didn't generate exhaustion buy at that point. We'd had our exhaustion sell, bullish divergence, blue professional bars down here at the lows. If we take out the highs of that move, that could show that that was just anxiousness getting into bonds at that point under a breakout of this channel area there. So we just need to get above this previous high, and that would show us that we're likely to break out higher in bonds. So it's on that lower time frame chart. But cyclically, down here we had pullback to end of trend on the highest time frame here, and then we've had resistance and support come in. So that is second cyclical turn after end of trend. Pullback to end of trend, first cyclical turn, second cyclical turn. Bars are red, we're showing in an uptrend. We could easily just break out of this, and that would be bonds rallying. That's the 30-year. 10 years, not quite as pretty a picture here on the daily chart here because it's not as clear what the professionals were doing at that point here, but we've got an exhaustion buy, maybe getting this move going. Again, we've got blue professional bars, down bars here on this chart. We just need to get above those blue professional bars, the highs of those blue professional bars, to show that they were buying that little bit of weakness and we're away. Backgrounds in red here, and in terms of cyclically, this is nice. Again, pullback to end of trend, resistance, support. So that's the second cyclical turn after end of trend on the highest time frame here. So the damage that's been done over the last couple of years in bonds, we've got rid of the trending energy and we based with one cyclical turn complete, resistance to support, and we're now starting to break out into strength and potential start of a new uptrend in bonds. So bonds going up because rates coming down. Rates coming down because there's weakness in the economy, but crude is strengthening. So I don't know which way to read that. Aussie Dollar. Aussie Dollar for me was the most interesting of the Forex charts because they were all super strong this week. But on the daily chart here, you can see over the last couple of weeks we've had big pro bars come in at the lows. This is a pattern I really like. Exhaustion sell with blue professional bars, with the background in blue showing big pro bars coming in here, and we immediately bounce from there, break into an uptrend. That's a spike down followed by an immediate rally out of that area. I think there were weak employment numbers that came out of Australia at that point, and that's what drove that spiky move down on that day. But it was right into an area where we've had support, blue professional bars, big pro bars coming in here at 64 again. But Aussie dollar, that's interesting for a break. Cyclically, it's a little bit ratty down here. No clear end of trends or area of support. Let's just move that up to a weekly chart and see if something more obvious comes in here. Often if the market looks a little bit, oh, there we go, that's nice. So here we go, super high average trade size coming here over the last couple of weeks here on the Aussie. So there's a spike down again below 60. We come in the blue, that spike that we had a couple of weeks ago there matches up with the blue professional bars of that stair-step trade up. So we got three levels. We got blue professional bars at the lows under 60, on the retrace, spike down, and we're just ready to just break out of this consolidation area that we've had on the Aussie. And then here we go in terms of cyclical patterns. We've got cyclical sign of strength here, broken above resistance. So the bars are red, so we're showing we're technically in an uptrend on the weekly chart in the Aussie dollar. Background's in red, which means we're in uptrend in terms of price and volume. We've been so used to some of these levels on the Forex charts. It'd be nice to break us out seriously into some new numbers rather than seeing 60s on the Aussie, seeing 70s and 80s. Let's see. A euro. So the euro had a strong week and just kept on breaking up and up and up. We're just under 112 at the moment. Blue professional bars down here at the lows. There's our exhaustion sell, bullish divergence. Didn't come with blue professional bars at the lows there, but when we came to retest into that whole area, there's the blue professional bars coming saying at 108, 107. Yep, I'll pick that up. Thank you very much. Breaks into an uptrend. Two signs of strength at the moment. No blue professional bars taking profits at the moment. And again, we're inches away from this important breaking us out of the 12 and a half area on the euro would be super important. Cyclically, here we are, we've got signs of strength down here. What is this? Pullback to end of trend on the highest time frame, followed by resistance to support. So, and again, second cyclical turn after end of trend. So pullback to end of trend, one cyclical turn, two cyclical turns. And the reason why it's important is because you have a trending move, then we typically have a consolidation period, which will be a couple of cyclical turns or 2 turns or 4 turns, and then we've got rid of our basing energy and we can move into another trending move, which can be a reversal trend or it can be a continuation trend. But at second cyclical turn, we're talking about this basing energy being exhausted and we can start to look at trending energy. And here the bars are red, showing an uptrend. We're breaking above resistances. Yeah, and it's just relentless on the euro this week, on the British pound this week. This is British pound this week. Even though on the tick bar charts the average trade size is super high, it does not register on the daily chart. The big pro bars came in over the last couple of weeks on these dips. Down here, down this dip, with an exhaustion sell pattern, we just rocketed straight from there. So that's why the British pound is strong, and we're breaking out of this channel. Here previously it was a support area around 32 or so that we broke through, and now we've been basing for a while and we're breaking out to the upside. So who knows where we're going to go, but I think it's going to be interesting trading over the next couple of months. Cyclical patterns on the daily chart here, pullback to end of trend, one cyclical turn, two cyclical turns. So we got rid of our trending energy, we go through some basing energy, and now we're breaking out of resistance on the highest time frame here. So super important on the British pound. Now, Japanese yen. We've seemingly cleared out the Japanese carry trade. So when the Japanese yen started to rally seriously, people were stopped out of their long positions in high risk markets around the world, and they're effectively a short Japanese yen position. And so with all of that activity that happened over the last several weeks, you'd have thought that it's cleared out a lot of that short yen positioning, so they're back down to a more neutral yen positioning. Previously we've seen this activity on the highs and we've kept on breaking down, but maybe with those exhaustion buy patterns that's beginning to get the move going, and so getting above the highs of that in the Japanese yen would show that all of that activity was neutralizing those short Japanese yen positions, and now we can have a cleaner market. So breaking above there will be super important. Let's see if we get through that this week. On the cyclical patterns down here, I mean, it's relentless on the downside in terms of this. Big things happen at triples. We either get big breaks or big bounces. It was a big break, bang, into this move, pullback to end of trend, and then it just kept on going to more pullback to end of trends on the way down. But again, that level there, these bars are red. When was the last time we saw a little bit of strength back here? What is that, beginning of 2023? But it's been white bars ever since on the daily chart. We've got some red bars happening at the moment. Getting above that level there, 71 on Japanese yen, would show strength in the Japanese yen. So the US dollar getting destroyed and all these other currencies rallying hard. That's what I see, at least. Gold's been doing extremely well. At 2400 though, were they taking profits? We had the exhaustion buy pattern here, getting this move going, breaking out of the 2350 area, which was important, and now we're breaking above there. So they've not taken profits at this point up here. My guess is this is getting this move going, so this is a strong move in gold that everybody's been looking at for a while. Cyclically though, running out of steam on this daily chart. Pull back to end of trend on the low, pull back to end of trend on the intermediate. We've got to probably put in pullback to end of trend on the highest time frame, but that's interesting. Does it show anything on the weekly chart that's of interest? So there was the lows. What was that, 1600? Yeah. Big pro bars down here, buying the lows, breakout at that point. Rambo patterns testing into those lows, got wrong-footed at 1800, and then we just rallied from there. Here it's showing exhaustion buy, blue professional bars at that point on the weekly chart, so maybe running out of puff a little bit here. So I don't think it's all over on gold at the moment, but I think there are better opportunities for rallies to continue forward. Bitcoin, we've got a problem. We've got a glitchy problem with data on TradeStation at the moment, so we don't have a clear picture of what's actually happened here. But the levels are right. We're at 64,000 this weekend, but this intermediate area is wrong. So hopefully TradeStation will fix that over the next day or so. But we're in an uptrend on Bitcoin from 20,000 down here. A sign of strength. All we've done at that point is just test into that 50 level. 50 level was really important. We have had exhaustion by bearish divergence, blue professional bars at these highs, but we're coming back up to test into that. And cyclically, what do we have? Yeah, big things happen at triples, just went off. Wednesday, Thursday's activity here. So support in all three time frames, pull back to end of trend. Where that goes will be interesting, but obviously that 72, 74 area is going to be critical. But we've got support behind us, so that's likely to keep on rallying at that point. No blue professional bars yet on this move up, so Bitcoin still rallying. So on these longer time frame charts, I think we're setting up for some big moves over the next couple of months. Crude's looking interesting, bonds are looking interesting, all the Forex markets are looking interesting. Gold less so, Bitcoin looking interesting. So all of those charts to me show that we might have a pretty strong risk-on rally. Interesting timing, because there seems like there's so much uncertainty at the moment, but maybe with this week's news items that there was quite a lot of positive news in it. RFK Jr. Announcement, the leaks beforehand, and the final announcement on Friday going over to Trump's side. Trump definitely more pro-business, and that move definitely helps his chances, I would have thought. And some of the Democrat policies, capital gains on unrealized capital gains, pretty nutty really, even though you say it's just for the billionaires, the high net worth individuals. It's definitely bad for the stock market. So maybe there's a realization that the likelihood of Trump getting in is a lot higher now, so that's a possible reason. News out of Ukraine and Gaza that we might have some truce or end to those wars. That might be a possible reason for some bullishness going forward. I don't know. It'd be interesting to look back in 2 or 3 months' time to see what transpires. But for me, the charts just look like we've got more room on the upside, and that will be interesting. So there we go. Thoughts for the weekend. Hope your trading is going well, and looking forward to next week's trade.